In today's market update, we're turning our attention back to the S&P 500. We're working with SPX data, and we're going to be considering how the market has been behaving very well in order to confirm our recent analysis. So let's start by zooming out. This is a weekly chart of the S&P 500, and according to this analysis, of course, we have a very big prominent 9-year cycle trough in March of 2020. I sometimes refer to this as the pandemic trough, and I'm going to provide a little more detail as to why I do that in a moment. But what has happened since that 9-year cycle trough, according to this analysis that you see on the chart, is that we have experienced one 18-month cycle and then a second 18-month cycle. And so we have completed 2 of the 3 18-month cycles that should elapse in each and every 54-month cycle. That means that we are currently in our 3rd 18-month cycle. You can see a very messy nest of lows here at the right-hand edge of the chart, but the next 18-month cycle trough is expected over here. As you can see, I think that's in about June of next year. And so the current 18-month cycle, according to this analysis, is the 3rd 18-month cycle of a 54-month cycle. Now, the 3rd 18-month cycle in any 54-month cycle must be the most bearish of those 18-month cycles. The reason for that is that following a very big, at least 54-month cycle trough, we would expect to see a bullish 18-month cycle, as indeed we did. And then we would expect to see a neutral-shaped 18-month cycle, or at any rate a less bullish 18-month cycle. But in this case, we did not. And that is therefore an anomaly in this analysis, because not only did we not see a neutral 18-month cycle, we actually saw a very bearish 18-month cycle with an early peak and a trough that was much lower than the level at which that cycle started. Then, of course, the 3rd 18-month cycle started in October of last year, and this should be the most bearish of the 3 18-month cycles, bringing us into the next 18-month cycle trough. Of course, this has not been a bearish 18-month cycle so far. So far, we have only seen the first 40-week cycle play out, which is, of course, the first half of the 18-month cycle, and that has been a bullish 40-week cycle, as you can see. We describe it as a bullish 40-week cycle because of the fact that it experienced a late peak. Late peak is a sign of a bullish cycle, and of course the fact the price ended the cycle much higher than the level at which it started it, and those two features together define a bullish 40-week cycle. And so, according to this analysis, we have an anomaly, which I have discussed in previous market update videos. This progression from a bearish 18-month cycle into a, so far, bullish 18-month cycle is something that we would expect to happen around the 54-month cycle trough. That sequence of bearish and then bullish cycles leads us to ask whether this might in fact be a trough of the 54-month cycle, which is of course the analysis I've been presenting in recent market update videos. If that was a trough of the 54-month cycle, that would imply that this trough over here in December of 2018 must have been the trough of the 9-year cycle, which we can see on this chart as being positioned in March of 2020. Let's take a look at an analysis that describes that possibility. Here you can see the 9-year cycle trough has been phased in December of 2018, which meant that the March 2020 trough was an early trough of only 18-month magnitude. How is that possible when the market moved down so strongly into that trough of March 2020? The answer is possibly what Hurst described as fundamental interaction. A Hurst cycles analyst is, of course, a technical analyst. In other words, we believe that the information that we need in order to analyze and trade financial markets is contained within the price. But we do not deny the fact that fundamental events, news events, and economic reports, the kinds of things things that are studied by fundamental analysts, we do not deny that they have an influence on price movement. Hurst described this as something called fundamental interaction. In other words, news events interact with the cycles and combine with the cycles to influence price movement. It is my suggestion, and it's something I've mentioned many times before, that this strong move down in March of 2020 was accelerated by the pandemic that was sweeping around the world. I say accelerated because at the time we were, of course, expecting price to move down into an 18-month cycle trough. That trough was in fact expected in about June of that year. There is an interesting conversation to be had about the possibility that fundamental interaction causes not only strong price movements, but perhaps also a distortion in the time element that we track with our cycles. We're not going to have that conversation now because it could go on for rather a long time, but it is possible that the fundamental interaction caused by the pandemic not only resulted in that strong downward price movement, but also possibly a distortion in the cycle action and therefore an early 18-month cycle trough. Nevertheless, this analysis with the 9-year cycle trough in December of 2018 then provides us with a first, then a second, and finally a third 18-month cycle, bringing us into the trough in October of last year. As a result of those 3 18-month cycles in the analysis, we phase that trough in October of last year as a trough of the 54-month cycle. The interesting thing here is that this move from the bearish 18-month cycle that elapsed into October of last year into the bullish cycle that we have seen following that trough is not an anomaly because of the fact that this is possibly, dare I say probably, a trough of the 54-month cycle. The only anomaly in this analysis is that the first 18-month cycle that we witnessed from December of 2018 until March of 2020 was not, in fact, a bullish cycle. It was what we describe as a mixed cycle because it did certainly have a late peak. As you can see, there is the peak. It occurred late in the cycle, which is one of the definitions of a bullish cycle, but it then had a lower price trough. Price carried a little bit lower in March of 2020 than the level at which it had started in December of 2018. That provides us with a mixed cycle. If you are a Hurst cycles purist, you might argue that this little trough over here that did form in June, which was when we expected that 18-month cycle trough to form, that is in fact the 18-month cycle trough, resulting in a bullish 18-month cycle, and that this strong move down and then bounce back up again is the result of fundamental interaction. But we're not going to debate that now. That remains a possible anomaly in this analysis. But as mentioned, it's not a terrible anomaly. What happened next was a very bullish cycle, which again is a slight anomaly because the second 18-month cycle would not be expected to be more bullish than the first one. But it does not actually contradict what is happening in this analysis. Then the third 18-month cycle was, of course, a bearish one, which was this cycle over here, which played out into October of last year. That was a bearish cycle, which is what you expect out of your third 18-month cycle. I'm providing this background here because as we zoom in and take a look at what has been happening in this market since then, I think it is important for us to consider what our longer-term expectation is. The first thing to be said is that we have now experienced a 40-week cycle trough. You will know that we've been monitoring 2 analyses, and I'm going to discuss that in a moment. The most likely position for that 40-week cycle trough, in my opinion, is still here in August, but we'll discuss that detail in a moment. And we have, of course, witnessed a bullish 40-week cycle, bringing us into that 40-week cycle trough. What is the next thing that we expect? We expect a less bullish cycle, bringing us into the next 18-month cycle trough. Here is the nest of lows for that 18-month cycle trough. It was a little more messy on the other analysis, as I pointed out a moment ago, but we are, of course, expecting an 18-month cycle trough to form perhaps in about April, May, or June of next year. So what are we expecting out of the next, or should I say the current 40-week cycle? There are various approaches to answering that. First of all, and this is why I've discussed the bigger picture, if this was a trough of the 54-month cycle, then generally this first 18-month cycle is expected to be a bullish one, and therefore we would not expect a perfectly symmetrical and neutral shaped 18-month cycle. And so our expectation is not for an early peak and then a strong move down. In order for this 18-month cycle to prove to be bullish, in other words, not just the first 40 weeks of it, but the entire 18-month cycle, we would expect the bullish impetus to continue. And so here we have the bullish 40-week cycle. We would expect a less bullish 40-week cycle to play out now because of the fact that the 18-month cycle is pressing down, but we would nevertheless expect this 18-month cycle to be bullish, implying that we are expecting a late peak. What does that mean? That means that this peak that we experienced in July is probably not the peak of the 18-month cycle. We expect higher prices in order to achieve a later peak for the 18-month cycle. Having formed that later peak, we would of course expect price to come down into this 18-month cycle trough. What I have drawn there in terms of the current 40-week cycle is a fairly balanced 40-week cycle. That's not impossible. The only requirement for the current 40-week cycle is that it should be less bullish than the previous one. Now that was a bullish cycle, so it's not very difficult to imagine a less bullish cycle, even a cycle that ends up being fairly bullish in itself. And so with a 54-month cycle trough in October, we are still feeling fairly bullish about this market. If, however, we decide that that is not the 54-month cycle, but only the 18-month cycle, we have the anomaly of a bullish 40-week cycle, and we would expect the market to turn bearish very soon in order to provide us with the expected bearish 18-month cycle. I should say that is not my preferred analysis for the reasons that I've already presented in terms of the anomaly with that analysis. But it would be foolish to completely ignore that possibility. And so we need to keep our eyes open as price action unfolds to ensure that the markets are still in a bullish mode. Now let's consider what has happened over the last 2 weeks or so and explain how we are able to clarify our analysis as price has continued to unfold and interact with these FLDs. Here is the preferred analysis that I presented in the previous market update about the S&P 500, which I believe was 2 weeks ago. And this positioned a tentative 40-week cycle trough over here in the 3rd week of August. Now, I mentioned in that market update video that, of course, our first interaction between price and the 20-day FLD was a price cross over here. That is an interaction that we label as an A category interaction. That generated a target of 4,500. That target was reached and fulfilled. Then, of course, price turned down again. Now, here is the nest of lows for the 20-day cycle trough, the first 20-day cycle trough following the 40-week cycle trough. We expect price to find support at the time that it forms the 20-day cycle trough at the level of the 20-day cycle FLD. This purple line is the 20-day cycle FLD, and last week price came down towards that 20-day cycle FLD and managed to remain above it, potentially finding support at the level of the FLD. The FLD, of course, itself over the weekend has been rising strongly because the FLD is simply median price displaced into the future, and so that is very simply this strong rise up over here displaced into the future, with the result that price has almost by default, and I'm recording this video before the markets open in the US, so this is overnight action on Sunday night, price has almost by default just slipped below that FLD. I don't take that kind of price cross too seriously. The important thing, in my opinion, is that when the 20-day cycle trough formed, and it almost certainly formed on Thursday of last week, price was finding approximate support at the level of the 20-day FLD, or in this case it was ever so slightly above the 20-day FLD. I'm also displaying the FLD for the 40-day cycle. I mentioned this FLD in the previous market update video and pointed out that the target of the move in which price crossed the 20-day FLD was at about the level of the 40-day FLD. We watched with great interest, and of course price crossed above that 40-day FLD and has remained above the 40-day FLD ever since. That generates a target up above this chart at a level of about 46.50. Would we expect price to achieve that target? Yes, we would. If this is indeed a 40-week cycle trough, then we have a good deal of bullish pressure, and we would expect the target generated by price crossing the 40-day FLD to be reached and fulfilled. Bear in mind, here is the nest of lows for the next 40-day cycle trough, that we would expect price to find support at roughly the level of the 40-day cycle FLD at about the time that the 40-day cycle trough forms. I pointed out in my previous market update video, in terms of trading the bounce out of this 40-week cycle trough, aggressive traders might have entered at the level at which price crossed the 20-day FLD. Less aggressive traders would wait until the formation of the 20-day cycle trough. They would expect to see support forming at about the level of the 20-day FLD. All of those things have occurred, and at about this time you would probably be interested in entering into your long trade in order to catch the move out of the 40-week cycle trough. If you are not very familiar with Hurst's diamond notation, which marks the position of the cycle troughs using diamonds at the foot of the chart, and these nests of lows formed by the circle and whiskers indicating the next expected time of the cycle troughs, then a very useful tool is the composite model line. The composite model line takes the analysis information and displays it on your chart, making the assumption that the cycles are going to keep beating with the same wavelength and the same amplitude as they move into the future, which is of course a flawed assumption because of the fact that the principle of variation tells us that these cycle wavelengths are going to constantly change, and their amplitude in particular will change. In fact, the amplitude, in my opinion, often changes a lot more than the wavelength does. Nevertheless, you can see the implications of this analysis, which is showing us very clearly that price is expected to bounce out of this 20-day cycle trough over here. It is then going to eventually get back above the 20-day cycle FLD, giving us a slightly anomalous BC category interaction. It is then going to reach a peak of the 40-day cycle, come back into forming the 40-day cycle trough at roughly the level of the 40-day FLD. There's the FLD over there, after which it is going to bounce up and continue upwards. As a matter of interest, the target that I calculated for the 40-day cycle FLD price cross, which occurred about 2 weeks ago, is 46.50. The composite model line indicates the price could reach up to those kinds of levels, but only after the 40-day cycle trough forms. Now, in a very healthy bullish market, we would expect the target of the A category price cross to be achieved before price comes down and forms the first trough of that cycle. But this is not always the case, and we will sometimes see the target being achieved after that cycle forms a trough. In this case, we're speaking about the 40-day cycle, and that in itself will give us a measure of the health of this market. Bear in mind that this current 40-week cycle is not expected to be as bullish as the previous one, and so we are going to be keeping our eyes open for possible bearish moments occurring in the market. Finally, for the sake of completeness, I would like to refer back to the alternative analysis that we were looking at in recent market update videos that positioned the 40-week cycle trough earlier over here in about the middle of July. This analysis implied that the trough that formed in the third week of August was only a trough of the 40-day cycle. The fact that price crossed up above the 40-day cycle FLD reduces the chances that this analysis is in fact the correct one, but it does not entirely eliminate this analysis from the realms of possibility. If we count the number of bars that have elapsed since that potential 40-week cycle trough in the middle of July, you can see there have been 63 days that have elapsed, 63 bars and 63 days. We had an interesting question, I should point out, this week about the fact that Sentient Trader is counting 63 bars and 63 days. That's because Sentient Trader considers the bars that didn't really exist in terms of trading action. It does count those bars because when working with the Hurst cycles approach, we count bars in terms of time, whether trading happened at that time or not. So weekends, of course, are displayed on the chart, and they are also counted because all of our calculations that involve bar counts must consider those days where there was no trading as proper bars. They are counted even though there was no trading. And so at 63 days that have elapsed since that trough, we are expecting the 80-day cycle trough to occur fairly soon. That would, of course, require the price turn down fairly soon. Here we've had a straddled 20-day cycle trough in this analysis because of the fact that we must be heading down soon into the 80-day cycle trough. And so we are getting analysis anomalies on this chart. This is the kind of thing that happens when you are watching an analysis that turns out not to be correct. In my opinion, this analysis holds very little water at the moment. I think this analysis is very unlikely. Of course, if we witness a sudden reversal and a strong bearish move, then we will turn our attention back to this analysis. But for the time being, the other analysis is more than likely the correct one. I do hope you found this market update useful and interesting. If you have any questions, please post them in the comments below this video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.